All right, this piece argues that despite a recent 10% drop, Rigetti Computing is a strong buy because of its large cash reserve and long-term potential. Let's jump right into how we can sharpen this investment thesis.
Okay, let's do it.
First off, we have to make sure the headline's emotional intensity actually matches the argument's very measured tone.
Ah, yes, the title.
You're using really aggressive language. Crash and golden buying opportunity. It sets up this expectation for, a very speculative, urgent piece.
But that's not what the article is.
Exactly. The content immediately pivots to a disciplined technical analysis. You're citing a solid $600 million cash position, an EPS beat.
Right, and specific support levels. I see the problem. That tonal whiplash really undermines the credibility of the serious analysis that follows.
It does. So if the goal is a reliable investment thesis, the suggestion is to moderate that drama. How about a title that reflects the balance in the argument?
So something less sensational.
Precisely. Instead of leading with crash, you could try something more analytical. Maybe RGTI, separating sector rotation from fundamental risk. Or, if you really want to keep that punch, then use the opening sentence to describe the profit-taking panic first. Frame the fear before you introduce the company's financial stability as the counter-narrative.
I see. Set the scene, then provide the answer.
Okay, next point. The analysis needs to explicitly connect that financial safety net to the immediate market headwinds.
Okay.
You strongly highlight the $600 million cash safety net, which is great, but it doesn't clearly explain how that cash neutralizes the reason for the drop in the first place, that Q3 revenue miss.
That's the core vulnerability, isn't it? The reader is left with a gap. They're thinking, why should I care about cash in the bank if they can't even meet current revenue targets?
That's the link we need to forge. The suggestion here is to establish a direct logical bridge. You have to show that the long cash runway gives them the flexibility to absorb these transient misses.
And to keep funding the R&D for the big stuff.
Yes, to fully fund those critical milestones, like the 1,000-plus qubit system in 2027, without, immediate dilution risk. And you can link the EPS beat directly to operational efficiency to really drive that point home.
Got it. So the cash isn't just a safety net, it's a strategic runway.
Exactly. And our final point targets strategic cohesion. It's about integrating the short-term trading tactics with those far-off long-term growth catalysts.
Okay, the entry and exit points.
Right. The material gives a very specific technical strategy. Enter at $22.50, short-term target of $38, and it's all based on signals like an oversold RSI.
But the bull case for a $50 plus target, that relies entirely on fundamental breakthroughs years from now in 2026 or 2027.
You see the disconnect?
I do. It feels a bit split. It reads like a quick technical trade that just sort of happens to have a fundamental backup plan. We need clarity. Is this a quick flip or a long-term investment?
And if it's the latter, a long-term play using a technical entry, the suggestion is to introduce a specific checkpoint at that $38 short-term target.
Ah, a decision point.
A decision point, yes. You could clarify that holding past $38 is conditional. It would require, say, positive updates on the 100-plus qubit system schedule or a major announcement about those Air Force contracts. That gives the reader an actionable roadmap.
That makes sense. It turns a simple trade into a phased investment strategy.
So, to recap, this analysis has a really powerful data-driven case for Rigetti. To maximize its impact, we recommend 3 core actions. First, harmonize the title's dramatic tone with the disciplined financial analysis.
Second, explicitly link that $600 million cash runway to actually mitigating the Q3 revenue miss.
And third, you need to clearly integrate the short-term tactical exit points with the fundamental milestones needed to justify holding for that long-term $50-plus bull case.
These changes should really tighten up the argument.
They should. We look forward to reviewing the revised analysis when you're ready to submit it again.